48 hours ago, while Western markets were closed and traders were sleeping, China activated the final piece of a strategy that has been building for over a decade. 7 pieces, all connected, all live. I have spent weeks tracing this puzzle. Treasury filings, central bank reports, CIPS transaction data, COMEX inventory drawdowns, every source verified, every number documented. What I found is not theory. It is a coordinated financial strategy so precise that by the time I show you the 7th piece, you will understand exactly why every major Wall Street bank raised their gold targets after the worst crash in 45 years. By the end of this video, you will see all 7 pieces connected. You will understand what China is building, and you will know what it means for every ounce of gold and silver you own. Once you see the full picture, there is no going back. Welcome to channel name. This is where I break down what mainstream financial media refuses to show you. If this analysis helps you, hit like and subscribe. It costs nothing and helps more people see this research. Today is different from my previous videos. Today, I connect all 7 pieces into one unified strategy. And there is one number in China's reserve filing that will change how you think about gold forever. Let me show you. Piece 1, the Treasury Exodus. In November 2013, China held $116 trillion in U.S. Treasury bonds, America's largest foreign creditor. Today, that number is $682 billion, lowest since 2008. That is $634 billion removed from the American financial system, larger than the GDP of Sweden or Switzerland, an entire European country's worth of capital pulled out. The pace is accelerating. In 2022, they sold $173 billion, 2023, $50 billion, 2024, $57 billion. Through November 2025, over $115 billion more. They dropped from number 1 holder to number 3. Here is the question nobody is asking. Where did $634 billion go? Money does not evaporate. It moves. Piece 2, gold accumulation. That money went into gold, your metal. The People's Bank of China has purchased gold for 14 consecutive months. Not 1 month skipped. You and I hesitate when gold drops 2%. China bought through a 69% rally without blinking. That is not trading. That is a national directive measured in decades. In early 2023, China held 2,010 tons. Today, over 2,160 tons. Value exceeding $319 billion, and those are just official numbers. Analysts believe actual holdings are significantly higher. But here is the critical number. China's gold reserves represent just 8.5% of their foreign exchange reserves. Compare that. United States holds 66%, Germany 68%, France 65%, Russia 30%. China is at 8.5%. If they reach even Russia's 30%, they need 5,000 to 7,000 more tons. That is $700 billion to $1 trillion in purchases that have not happened yet. Think of it like a marathon. China has run 2 miles, 24 miles remain. Piece 3, silver export controls. On January 1st, 2025, China implemented export restrictions on silver. Only 44 approved companies can now export. Everything else requires government approval. China controls 60 to 70% of global silver refining capacity. They process ore from worldwide mines into finished product for solar panels, electronics, EVs, and AI chips. They just restricted the exit door. Layer this on existing conditions. The silver market has been in supply deficit for 5 consecutive years, cumulative shortfall, 820 million ounces, an entire year of global production consumed and not replaced. That silver is embedded in solar panels across Germany, soldered into circuit boards across Asia, inside EVs in Shanghai and Oslo. It does not come back. Mine production grows 1% per year because 70% of silver comes as byproduct from copper and zinc mining. You cannot just open a silver mine. Discovery to production takes 10 to 15 years. Supply curve is glacially slow. Demand curve from solar and AI is exponential. Those lines are racing in opposite directions. Piece 4, CIPS, Cross-Border Interbank Payment System, China's alternative to SWIFT. SWIFT moves almost every international dollar transaction. It is also how America enforces sanctions. In 2022, they cut Russian banks from SWIFT and froze $300 billion overnight. If you were China, sitting on $1.2 trillion trade surplus, watching another country lose $300 billion instantly, what would you do? Build your own system. In 2021, CIPS processed $13 trillion. By 2024, at $24.5 trillion, nearly doubled, 43% growth last year alone. Cumulative transactions now exceed $94 trillion, 124 countries, 4,900 banks, all connected to move money without US dollars. Think of SWIFT as the only highway between cities. China just built a second highway, fewer lanes today, but 124 countries connected and traffic growing 43% annually. Once people have a second route, they never go back to depending on one. Piece 5, digital yuan. China built M-Bridge, a cross-border settlement platform, $55.5 billion processed since 2022. Yuan accounts for 95.3% of volume. Look at the partner central banks: Hong Kong, Thailand, United Arab Emirates, and Saudi Arabia. Sit with that name, Saudi Arabia. The 1974 petrodollar agreement made every barrel of oil priced in dollars. That deal has been dollar dominance's backbone for 50 years. The reason America runs $36 trillion in debt and the world still buys its bonds, that country just joined China's digital yuan platform. What happens when every Gulf oil nation sees the Saudis at China's table? Piece 6, yuan trade settlement. 1/3 of all Chinese trade now settles in yuan. A decade ago, near zero. When China buys oil from Saudi Arabia, sells electronics to Southeast Asia, trades with Africa and Latin America, growing shares never touch dollars. The dollar is not in the room. Every percentage point moving from dollars to yuan is permanent demand destruction for your currency. China is also converting dollar-denominated debt to yuan. Kenya converted $3.5 billion. Ethiopia, Pakistan, Sri Lanka, Zambia, considering the same. When a country owes dollars, it needs dollars. It uses SWIFT, it stays in America's orbit. When debt becomes yuan, it trades with China, uses CIPS. One conversion shifts an entire nation's financial gravity from Washington to Beijing. Piece 7, doctrine. In 2025, Xi Jinping called currency strength a pillar of national power. First time a Chinese leader framed currency as geopolitical weapon. Then they wrote it into law. China's 15th five-year plan, 2026 through 2030, explicitly prioritizes yuan internationalization as a strategic national goal. This is not a speech. This is state policy for 5 years. The second largest economy just told you exactly what they are doing. Let me connect all 7 in one breath. Sell U.S. Treasuries. $634 billion accelerating. Buy gold. 14 months straight. Restrict silver exports. January 1st, 44 companies only. Build CIPS. 124 countries, 4,900 banks. Launch digital yuan. Saudi Arabia on board. Settle trade in yuan. 1/3 converted. Make it doctrine. Written into 5-year plan. Every piece is live. This is not a plan. This is execution happening now. China is not attacking the dollar. China is building an exit from the dollar. And that exit is paved with gold. I owe you honesty. The dollar is not dying tomorrow. Still 56% of global reserves. Yuan is 2.6%. In every crisis, the world runs to dollars. China has capital controls, shallow bond markets, party-controlled legal system. Real limitations. Anyone saying dollar collapses next month is selling fear. But the monopoly is ending. In 2000, dollar was 72% of reserves. Today, 56%. 16 points in 25 years. Not a crash, an erosion. In that erosion, both sides need hard assets. America needs gold for credibility. China needs gold to build it. Gold wins regardless of who wins the geopolitical chess match. You're gold and silver. You are the farmer supplying both sides. Here's my take. China is not destroying the dollar. They are building a hedge. They watched Russia lose $300 billion overnight and decided their surplus was too exposed. Gold is insurance. CIPS is the escape route. Yuan is the vehicle. Silver is leverage. 7 pieces. One strategy. Already live. I believe gold is in a structural multi-year bull market. Central banks buying 1,000 plus tons for 4 straight years is regime change in how nations store wealth. I believe silver has the most asymmetric setup I have ever studied. 5-year deficit. 820 million ounce shortfall. Export controls on 2/3 of supply. Solar and AI demand growing double digits. But volatility will be savage. Silver does not rise in straight lines. If you cannot handle 40% drawdowns, silver will break you before it makes you. This is not investment advice. This is my reading of the data. 7 pieces, all connected, all live. Central banks have not stopped buying. Deficits have not closed. China at 8.5% gold reserves. West at 66%. The marathon barely started. In the 1970s, gold went from $35 to $200, crashed 50%. Everyone said it was over. Then it hit $850. Every crash felt like the end. None were. When you see all 7 pieces, do you think this is the end or the middle? If this helped you, send it to one person who needs it. Subscribe to channel name. I break down what mainstream media will not touch. Next video, how major banks positioned before the crash. The timing, the filings, you will not want to miss it. Drop your 2026 gold and silver targets in comments. I read everyone. See you in the next one.